Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Welcome. I'm so glad you're here today because today is a very special day. It is Keep It Simple Day. Imagine that. Keep it simple. And I'll explain through the show why I'm deciding on this topic today. But basically, we're going to talk about 4 simple but very, very key concepts about reverse mortgages that you need to understand to make an informed decision. And really, it's all you need to understand unless you want to move, unless you feel like you want to learn more. But you don't need to, okay? Because what happens is way too often, I'm very guilty of getting into the weeds when explaining reverse mortgages. If you've listened to this show, you know what I'm talking about, which is really ironic because I love to garden. I love gardening. I'm so excited about the upcoming spring season and everything. But I hate weeds. I hate them. They drive me crazy. But when it comes to reverse mortgages, I love getting in the weeds. I love all the nitty-gritty details about reverse mortgages, how the principal limit grows and how you can use a line of credit for all these different concepts, how the reverse mortgage for purchase program works and the concept of overfunding reverse mortgages and things. But you don't need to know all that stuff in order to make an informed decision about reverse mortgages. And the 4 things that we're going to talk about today on the show, right up front, is number 1, what are you hoping a reverse mortgage will do for you? That's very simple, but we'll get into the detail. We'll dig into it as well. But what are you hoping a reverse mortgage will do for you? And does it actually do that for you? That's the main decision. Number 2, do you qualify for the home or for the reverse mortgage? As far as a number of different things that you need to understand about qualifications. Number 3, the cost. What does a reverse mortgage cost, both in upfront costs and ongoing costs? And number 4, what happens at the end of the loan? What happens when the loan comes due? What even causes the loan to come due? So those are the 4 main topics we're going to talk about. If you get those 4, you don't need to know about all this other stuff that I get into on the show. I do that because I'm looking for stuff to talk about, but also I think it's interesting, and I think some people really like to understand the workings, the nitty-gritty, the minutia of reverse mortgages. If that's not you, keep it surface level. Because what prompted this is I had a conversation with a lady, a listener. She listens to the show and this week, and she went to my website and downloaded my consumer guide, which is at reversemortgageradio.net. reversemortgageradio.net. You can go there, download my consumer guide, and I need to simplify that as well. I need to update it for 2024, number 1, but also I'm going to shorten it. It's like 35 pages, and it should be half that. We're going to make some changes to that consumer guide so it's not so cumbersome for you you don't need to know all this stuff, depending on what your situation is. But she just wanted to get a second opinion. She spoke to somebody and she has a quote and she wanted to compare it. And I'm meeting with her Monday. But when I was talking to her this week, she started telling me she wanted a monthly income and she wanted to receive, not income, technically it's not income, but she wanted to receive a monthly payout. And I started, for some reason, saying, well, you can, you don't have to make a payment, but you can make payments if you want to. And she said, well, why would you do that? And I started going off on why she would make a payment when there's no way in the world she's ever going to make a payment because she wants to receive payments. And I just confused her. And in fact, she told me, she said, and if you're listening, please accept my apologies. Well, I'm going to keep it simple on Monday when we meet. But she told me, she said, I thought I understood this when I met with that other lady, but now I'm kind of confused. And I'm like, oh my gosh, what are you doing, Bruce? So today we're going to keep it simple. And what happens, I think, is sometimes, because I've been in the reverse mortgage business for 21 years, I know all the details and I find them fascinating. Surely everybody else would find them fascinating, right? No, that's not the way it works, Bruce. Duh. But what happens is I've fallen into this old sales trap of show up and throw up. And basically I learned this 35, 40 years ago. And by the way, too, everybody in finance is, well, most people are in sales in some respect or another. And if you're dealing with somebody, whether it's a bank or a mortgage broker, financial advisor, whoever, they're in sales. Okay. They're there to sell you something, a product, a service, whatever the case may be. Even if they don't get paid directly by like a direct commission when you close on whatever it is they're talking to you about. And it honestly, it's financial services are great. A lot of them. A lot of the products are very, very beneficial for people, but sometimes there's things that you don't need either, including a reverse mortgage. I've talked to people who've had reverse mortgages, not from me, but they've had reverse mortgages and they regretted it. I didn't really need this. I don't know why I did this. And they got sold. And that is not what I want to do. I want to educate people, give you enough information so you can make an informed decision, but also not overwhelm you and make you confused, because a confused mind does nothing. And it's very possible that doing nothing could hurt you over time instead of getting a reverse mortgage today and you benefiting over time. But you're the only person who can make that decision. However, when people are confused, it's easier just not to actively make a decision. You're still making a decision, but you're not actively deciding yes or no. You're just saying, I'm going to keep it the way it is. And that's sometimes not the best. Sometimes it is the best. But I'd rather make sure you have the accurate information so you can make an informed decision. So we're going to keep it simple. However, I should start off the show, 7 minutes into the show now, by telling you are listening to Reverse Mortgage Radio. I'm your host, Bruce Simmons, and I'm the reverse mortgage manager for American Liberty Mortgage in Denver. And I've been in the reverse mortgage business, specializing exclusively in reverse mortgages for 21 years, since 2003. And which is just coincidentally the same year the company I work for and have worked for the last 12 years started in business as well. American Liberty Mortgage they opened up their doors in 2003, just like I started working with reverse mortgages in 2003. But you can reach me directly with any questions about reverse mortgages at 303-467-7821. 303-467-7821. That's my direct line. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. And you can go there and download my consumer guide, just like that lady that I was telling you about, my listener, and that I'm meeting with on Monday. So let's jump into it. Let's dig into a little bit about what these 4 topics are and why I think that they're important for you to know. I think probably the most important thing is, why do you think a reverse mortgage might benefit you? People will tell me, well, I need to pay off my existing loan on my home and save money. Well, why do you need to save this money? Yeah, it's great to save money, but is there something that you want to do? Are you not saving enough for retirement? Or are you getting ready to retire and you can't afford to retire if you have a mortgage? Or are you stretched so thin every month that there's more month at the end of your money? Whatever it may be, you need to understand what the concept of it is and why you're needing this extra money. And does a reverse mortgage actually help you solve this problem? If we can pay off your mortgage and that's it, but we're only saving you $350 a month and you really need $1,000, well, then it may not be beneficial for you. It may not be worth it. So you've got to analyze exactly what it is you really want to accomplish with the reverse mortgage. Maybe you want more money so you could travel, or maybe you want to have additional funds in a line of credit that you don't have to tap unless you have an emergency. A lot of people like having that emergency fund. For example, I've done a number of loans for people where the majority of the money goes to pay off their existing mortgage. So they have no mortgage payment. It saves them $800, $900, $1,200 a month. And then they have $20,000, $25,000, $30,000 left over. They don't have a use for it. They're not worrying about paying off bills or anything. But what it does is it is set aside and gives them peace of mind. If their furnace blows up, hey, I've got money without screwing up my budget. I've got money if my car dies, or if there's a special trip that I want to take, whatever the case may be. So that having that reserve where maybe you only had a few $1,000s in the bank or no savings at all. Some people are in that situation too, which is really scary, I think, because then the only option if you absolutely had to have money is debt. And we know, you've heard, I'm sure, over and over that consumer debt is at record levels right now. Government debt, record levels. Business debt, record levels. Something's going to pop at some point. I don't know what, and I don't know which, or all three, who knows. Probably a combination is my guess, and who knows what's going to happen then. You don't want to be behind the eight ball, and a reverse mortgage could help you out of that. Okay, number 2, do you qualify? Number 1, are you old enough? In order to qualify for a reverse mortgage, you need to be 62 years old for the FHA insured reverse mortgage program, 55 for the non-FHA insured reverse mortgage program. And then do you have enough equity? That's a big one too now, because as interest rates go up, the amount of money we can loan as a percentage of the value of your home goes down on reverse mortgages. Back when rates were in the 2s and 3s and 4s, for example, somebody who was 62 or 63 years old, somebody in their early 60s, could get close to 50% of the value of the home, 50. So if you had a $500,000 home, we could loan you $250,000. Now, because interest rates are in the 6s or 7s, the amount of money we can loan as a percentage of the value is closer to the low 30% range. So now, instead of getting $250,000, you're getting like $150,000 on a $500,000 home. People say, well, I have $300,000 in equity in my home because I only owe $200,000, and you're telling me you can only loan me $150,000 or $160,000? Yes, that's what I'm saying. Right now, because of the way the interest rates are, unfortunately, that's the case. Now, just because you don't have enough money just to pay off your existing mortgage doesn't mean we cannot do the loan for you. We have to pay that loan off. That loan has to be paid off. Whatever existing loan you have on your home has to be paid off, because a reverse mortgage is the only loan that's allowed on your home once you have it. However, I've done loans for people. In fact, I'm talking to somebody right now who, based on the numbers we have, it looks like she's going to be about $11,000 or $12,000 short. So in other words, she owes like $250,000, for example, and we can only loan $238,000. So she's going to have to bring $12,000 to closing in order to pay off that $250,000 loan. And in her mind, she's going to be saving $1,500 a month. She's going to have that $12,000 back in a matter of a few months. So it makes sense for her to do that. And she's in a house that she wants to stay in. That's the other thing, is does the house qualify? That's a couple of situations that I've run into. Let's say you've got a log home, a log cabin, or an A-frame. We have to find homes that are comparable to yours for the appraisal. When the appraiser goes out and he says, okay, you have a log home, he has to find 2 other similar size comparables that are log homes. If you live up in the mountain in the foothills somewhere, evergreen or conifer or Genesee or someplace, and you have a log home on 8.5 acres, we've got to find 2 other homes that have sold that are log homes in similar acreage and similar square footage. Let's say yours is 1,500 square feet, but then there's another log home that's 2,500 square feet on 30 acres. Well, that's not a comparable property. Even though it's a log home, it doesn't count. And it's very difficult to find comparables for log homes. A-frames the same way. One time I did a loan, I was going to do a loan for a customer, and he came into the office and I didn't ask him about any details about his home. He came into the office, signed the application, we ordered the appraisal came back. It was a berm home. So it was like a hobbit hole. It was half in the mountain behind it. And it was not, there were no comparables for it. It did not qualify for an FHA loan. So that's the other thing. Or let's say you're remodeling your home. You're in the middle of a remodel and you run out of money. Now you've got, even if the house is livable, you're living in the home, but you've just got plywood floors or your bathroom is still torn apart. Even if you have another bathroom, FHA requires those repairs to be done prior to closing. So you have to pay for those out of your pocket. I can't give you the money to finish those repairs with a reverse mortgage. You'd have to go get another loan, pay to finish up those repairs, and then you could get a reverse mortgage. So keep all that in mind. I mean, again, if you're in a unique situation, give me a call. My number is 303-467-7821. I'd be happy to come out and look at your home and let you know if I think there's issues with the appraisal. Now, if you just have peeling paint or little things like that, that's not an issue. It has to be fixed, but we can do it after the closing. Okay? Now, number 3, the cost. A lot of people are under the impression that reverse mortgages cost a lot of money. I always say, compared to what? Is it compared to a conventional mortgage, a HELOC, an annuity? Because it's basically a reverse mortgage is all of those wrapped into one. Except that it's better than all of them combined, in my mind, because there's no payment required. So you can't really compare it to a traditional mortgage. It does have mortgage insurance because it's an FHA loan, and that's the biggest part of the upfront cost. Well, actually, it's part of the ongoing cost as well. The mortgage insurance premium that you're charged, now it's not out of your pocket, but it's added to the loan, but you're charged a mortgage insurance premium of 2% of the value of your home. If you've got a $500,000 home, that's $10,000 as part of the closing costs. That's just part of it. So you've got to factor that in. Are you going to be staying in your home for the next 5, 6, 7 plus years or foreseeable future? Because if not, it may not be worth it. You're not benefiting enough over, say, the next 2 years to make up for those upfront closing costs. That's the other thing that you have to factor in too. And then ongoing costs. The reverse mortgage is what's called a negative amortization loan. No monthly payments are required. The house is still yours. It's still in your name. And you have to continue to pay your own property taxes and homeowner's insurance. You have to maintain the home, live there as your primary residence, and keep your name on title. As long as you do those 5 things, you can never, ever, ever be kicked out of the home. You can never be demanded. There can never be a demand for you to pay. Well, I guess on your 150th birthday, that's 150. When you turn 150 years old, that's when the loan comes due. If you're still in your home at that time, I would fight it. If I was 150 and I had a reverse mortgage on my home and they tried to tell me the loan was due, I would say, no, I'm not paying. Kick me out. I dare you. I bet you 10 to 1 they wouldn't do it. Anyways, that's the only way you could the loan will ever come due, is if you live to be 150, or if you don't pay your taxes and insurance on the house, or don't live there as your primary residence. Okay, so you've got to do those things. But then you're still charged interest every month, interest and mortgage insurance. The mortgage insurance that you're charged on an ongoing basis is 0.5% of the loan balance per year. All right. So that cost gets added to the loan balance, just like the interest. Every month you get a statement in the mail. You're going to see that balance getting larger and larger and larger over time every month because the interest you're charged gets added to the balance. That's the negative amortization. Your balance gets larger over time instead of smaller. You have to be okay with that. If you're not okay with that, do not do the reverse mortgage. If you're telling me you have to leave a free and clear home to your heirs, then you need to do something else. You cannot, a reverse mortgage is not in your best interest. However, if you say you want to leave a free and clear home to your heirs, but in the meantime, you're going to have to be collecting money from them so you can afford to stay in the home, well, that kind of defeats the purpose. You know, I would recommend doing a reverse mortgage, maintaining your independence, and odds are there's going to be a lot of equity in your home anyway, because we're typically loaning between 33% of the value of your home and say 50%. That's where most people fall. So even if you're 85 years old, we're loaning 50% of the value of the home. You're probably not going to live in the home another 15 or 20 years, enough to where that loan balance is going to grow to exceed the value. And this brings us to the last one. Number 4, what happens at the end of the loan? The loan only comes due when the last homeowner permanently leaves the home. And in that case, let's say you pass away. Your heirs inherit the home. The heirs inherit the home. I'll repeat that. The heirs inherit the home. The bank does not take your house unless your heirs don't do anything. They have a certain time period. They've got 6 months to either pay off the loan or refinance it. If they can't do it within that time frame, then they have to, it's possible they could get an extension or 2 extensions from HUD for 90 days each time. So they get a 3-month extension and then another one. They could have up to a year to either sell the home or refinance it. However, within the first 30 days after you pass away or permanently leave the home, the heirs need to communicate with the servicing department, the lender who's servicing the loan, and let them know that what their intention is. Yes, we're going to sell mom's home. We're fixing it up and we're going to have it listed in 40 days or 35 days or whatever the case may be. The lender has certain time frames that they have to meet, or FHA will revoke their mortgage insurance protection. The mortgage insurance protects the lender against loss, which indirectly protects you in your estate. So basically, if your heirs don't do anything, they don't communicate with the lender for 90 days, the lender is going to begin foreclosure. They don't have to wait 6 months to start foreclosure. And it's very important that your heirs understand that. That's why I make sure that people understand this. And I have family meetings with people. You know, mom has a meeting. We have a meeting at mom's house, and there's kids and grandkids and attorneys and financial advisors, whoever you think is important to help you make this decision, I'm willing to meet with and explain how this all works. But those are the 4 key things. Number 1, what are you hoping a reverse mortgage will do for you? And will it actually do that for you? Okay, whatever your goal is, you got to make sure the reverse mortgage is accomplishing that goal, or you shouldn't do it. Number 2, do you qualify? Are you old enough? Is there enough equity? Does the house qualify? Number 3, there are costs. You need to understand what those costs are, both the upfront closing cost and the ongoing cost, including mortgage insurance and interest. And then what happens at the end of the loan? And actually, it's probably more important for your heirs to understand that. And I give you a handout at the closing that says what to do when the loan comes due. And I can give that to you anytime before. You can call me at 303-467-7821 and say, hey, can you send me that handout, what to do when the loan comes due? I'd be happy to. I'll send you a PDF copy of it. Or I can print it up and mail it to you if you'd rather. Whatever works for you. So you've got to know how this loan works. Your heirs still inherit the home. Now that we've got it, we still have a couple minutes left, though. I want to touch on one other thing. Misconceptions. Most of the misconceptions with reverse mortgages stem from negative press back way before FHA got involved with the reverse mortgage, because FHA has been involved with reverse mortgages since 1989. Did you know that? That's when the first FHA insured reverse mortgage loan was made. President Reagan actually signed the bill for the home equity conversion mortgage. And that's back in 1988. He signed the bill, and the first reverse mortgage, FHA insured reverse mortgage, was closed in 1989. Excuse me. And but a lot of the negative press started back in the 60s, 70s, and 80s. However, in 2008, we ran into some other problems, because in late 2006 and 2007, a lot of the people that were doing subprime loans, the loan officers, they felt the tide shifting under their feet on the subprime market, and they thought, hey, reverse mortgages, nobody has to qualify. There was no qualifications then other than age and value of your home. If the home qualified and you were over 62, you got it. Now, there's income requirements. We check your credit. We make sure that you do all this stuff. But what happened is a lot of people took out loans, reverse mortgages, and even though they signed papers, they signed 50 pages of papers, some of them said that they had to pay their taxes and insurance on them. And a lot of homeowners weren't paying attention. The loan officers were not clear that, hey, you know what? You are responsible now to pay your taxes and insurance. And a lot of people did not pay their taxes and insurance, and that resulted in defaults. And there were a lot of people who did not pay their taxes, and they got foreclosed on. But the press says, oh, this 80-year-old woman lost her home because she had a reverse mortgage. No, she didn't. She lost her home because she didn't pay her taxes. Now, granted, it was on the industry. It was our fault for not making 100% sure she knew that she had to pay her taxes and insurance. But either way, that's where a lot of the bad press came from. That was just one example. There were multiple situations that were similar like that. And since then, we've made a ton of changes to the program. We've improved it, made it more difficult to qualify for, honestly. And we've reduced the amount of money we could loan to people so that the odds of you going upside down, like ending up owing more on the house than it's worth, are a lot less than they were back in 2005, 6, 7, and 8. Please feel free to call me with any questions. Hopefully you enjoyed the show. My name is Bruce Simmons. I'm the Reverse Mortgage Manager for American Liberty Mortgage, and you've been listening to Reverse Mortgage Radio. You can get a complete podcast if you just tuned in and you missed it. You're like, darn, Bruce, I missed it. What am I going to do? Well, you can call me, and I'll answer whatever questions you have. You can also go to my website, though, at reversemortgageradio.net. reversemortgageradio.net. In the upper right-hand corner, click the Reverse Mortgage Radio show, and usually by Tuesday or Wednesday, my web guy will have this show up there, and you can listen to the entire show. Thank you so much. I look forward to talking with you. Hope you have a great day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.